joined by Eric Jensen, Managing Director, Exploration at EMX Royalty here at the Black Diamond Conference. Eric, great to see you. How are you?
Doing really well, yeah. Nice conference so far.
Enjoy, yeah, and you just did a great presentation. I'm going to make an uninformed observation and say EMX Royalty with a little gold in the logo and royalty in the name. Gold royalties is related to what you guys do.
Absolutely, yeah. Our company really emphasizes the acquisition of royalties and exploration projects that are centric to typically gold, but copper, and we do some work in lead, zinc, silver too. So it's a diversified portfolio, but we are best known for our work and our exposure to gold and copper.
Okay, so talk a little bit about the assets then, the type of assets. I mean, it's royalties, but where are the assets? What types of assets are you interested in?
Great question. So right now, what we've seen is that the exploration market's been in a downturn since 2011. For the past 6 or 7 years, there's been relatively little exploration that's been funded and has taken place. And the exploration pipeline that fuels the global demand for mineral resources is running dry. And so what our company does is we specialize in generating new projects that are sold into the industry, and we sell those projects. We retain cash, sometimes equity in the partner company, but most importantly, a royalty interest. And so in that case, we've built a portfolio of about 100 projects in 14 countries around the world, across the commodity spaces, different jurisdictions, a highly diversified portfolio, much of which is partnered to other companies who advance the projects and enhance value in our interests. That's the tenet of the core of the business model.
Okay, and so let's talk a little bit about the business model. Parts of it look like prospect generator, but it's more complicated than that. And you have a chart in one of your presentations. I'll throw it up for the presentation. You can tell people how these three different, concepts flow in to provide stability and upside, right?
That's right. So what we're trying to do is we're combining the optionality and upside potential of the exploration business and the successes you can have there with the long-term stability and payout of a royalty company. And so we combine both those approaches. And so our bread and butter, our core function as a company is to generate new projects, sell them onto our industry partners, retain a royalty, and by doing so, we create this global royalty portfolio.
Yeah, and so normally, first off, when I hear streaming or royalty, I think income, but you guys are actually investing this back. This is sustaining your operations, correct?
That's right, yeah. A lot of our proceeds go back into the front end of the process to acquire new properties, which we in turn sell. And this is how we've grown this portfolio through time. So back in 2010, when I joined what was Eurasian Minerals, now EMX Royalty Corporation, we had about 30 project interests, and now we have over 100. So it's tripled in that time frame, and since 2016, it's roughly doubled. So this is an accelerating process through time that continues to build more and more value. But you mentioned before those other business approaches. With our technical team, we also go out and make strategic acquisitions of royalties if we think that there's a technical upside that's not recognized in the market. So when you look at the pricing of royalties, they sell at a premium, but sometimes we see royalties where we know that the technical upside is much greater than what the market's getting credit for in terms of the pricing of that royalty. Those are the ones that will move on. Likewise, we also see companies that oftentimes have good asset bases that are undervalued in the market. We can make strategic investments there which generate nice returns. In fact, we just did that. One of our partner companies sold a nice asset, a copper asset in Russia, and that's going to net us $68 million. So the asset was sold for $200 million. We're the largest shareholder in the company. Our proceeds in that will be $68 million.
One of the points that my boss likes to make is that mining is not necessarily a cap-intensive business. It can be a knowledge-intensive business, and your business model really brings that out, doesn't it?
We absolutely leverage that. That is our key form of leverage. That's what we bring to the market. We utilize that capacity to go out and to generate our projects, make these, advance these projects to the point which they can be sold to other companies, convert them to royalties, and make money doing it. So absolutely, we leverage that. Our burn rate's really low because most of our portfolio, the advancement is paid for by our partner companies, funded by the other companies that are advancing those assets in which we retain the royalty interest.
You presented that concept in the form of a pyramid diagram. Yeah. Talk a little bit about that. The number of projects at the bottom and what goes up, what happens as you go up the pyramid.
Yeah, you're referring to a pyramid that shows the stage of project advancement. And so what our job is as exploration geologists, we put in early stage projects at the bottom of the pyramid, and then through the advancement, through time, these things move up the pyramid, and it's a winnowing process. Not every exploration project becomes a discovery or a mine. So the number of projects that advance to higher positions on that pyramid diminishes through time. But those are the key value drivers. The farther they go up the pyramid, the more value and cash flow they can generate for our company. What's interesting about that pyramid is that fairly low, you notice that green bar that was the partnership line. That's where we sell the project into a partner company, and it gets converted to a royalty asset that's advanced by another company. So most of that pyramid, the advancement is paid for by other companies, and so our cost of operation is relatively low.
Right, and you stay in your comfort zone or your optimal performance zone, in the intellectual part of it. Not to say that the other part is not, but you know what I mean.
That's right. Yeah, we have strengths in the company. We know what those are, and that's what we leverage. And so we've got a great team of entrepreneurial geologists that comb the world looking for these opportunities. And so we spend a bit of money on that, but when we sell the projects, that money is returned to the treasury. And so it's a sustainable growth model that in which through time we can build this ever-expanding royalty portfolio. It's working really well.
Yeah, and looking at the management team, use some sports language, the depth chart.
Yeah.
It's quite deep, technically anyway.
That's right.
Talk about that a little bit.
Yeah, we have a great technical team, a lot of expertise, and some of the places that we work. So we follow people, and so if you look at our jurisdictions and our footprint globally, that's following technical expertise that we built in our group. So the southwestern U.S., we have a great technical team down there, so we focus attention there. Scandinavia, we've had a presence there for a decade. We're really good at exploring there now. And so, yeah, we tend to focus our activities in places where we know we have that technical advantage because that's what we leverage.
Right. Doesn't hurt that your CEO has a graduate degree in science either.
It's great. Yeah, I know Dave speaks the same language as we do. He's very good on the business side, but he's also, people often overlook the fact he's a very skilled exploration geologist as well. So when we talk about these things, we all speak the same language, and that's really important.
In the room over there, you mentioned that you have a team of geologists, economic geologists, but then you add entrepreneurial. And when I think geologists, I think smart guys who like nature. When you talk about economic geologists, it's smart guys who like nature who want to be paid.
Yeah,
and when you add entrepreneurial, these are the guys that actually know how to do it.
That's right. Yeah, creative minds. These are people that can recognize opportunity and value where other companies have not. That's what we try to leverage. And one thing I want to point out too is this big property portfolio that we built that's ever expanding. It's over 100 assets right now. We built most of this during the bear market. And so in this, the way that our company structures, we get back into a regular bull market where there's a greater appetite for exploration projects. This thing can really take off. We've done great as it is. With strong treasury, we're a very healthy company, enthusiastic people that are really enjoying themselves right now. But when this turns into a bull market, it's going to be even better.
So talk about growth for a second. So you showed how many projects really that you guys have launched since you came on. At what point, in terms of scale, do you have to start looking at bigger projects only, like the whole Warren Buffett hunting for elephants only, you know what I mean? Because at some point, scale becomes an issue, doesn't it? It's not as easy as when you're small.
That's an interesting question. So there's different ways to look at that. So the scale of the portfolio is one thing, the number of projects. But in that portfolio, I would argue that we have a significant percentage of those projects are elephant-type opportunities. This Malmyzh project in Russia that was just sold was an example of that. That became a 2 billion ton copper-gold discovery. And especially our projects in southern Arizona, in the copper belt of southern Arizona, those are swing-for-the-fences type opportunities for big discoveries. That's elephant country. We're happy to hunt there if we have the technical expertise, which in that case we do. We also have a big project, a copper project, in terms of its spatial dimensions in Western Australia, for example, that is of that ilk as well. These are some of the projects in the portfolio have those sort of home run type opportunities, but we balance that. We also like the high grade, smaller tonnage but high margin type opportunities that you get with VMS systems, volcanogenic massive sulfides, which tend to be smaller deposits volumetrically, but can have immense margins and return on investment for those things. So we try to balance that.
Okay, and finally, as we conclude, let's talk about your shareholders, your partners. Warren Buffett likes to refer to his shareholders as partners, even though technically they're, it's a C Corp and they're shareholders. It's important to have partners in this business, right? When you put the stakeholders up, when you list the stakeholders, among them Paul Stevens, among them Sprott, and then third EMX directors and employees, that's really important.
Yeah, I'm one of the shareholders. Yeah, the people in the management group and the employees at EMX, we all have equity exposure. I'm a significant shareholder in the company, and we make decisions. We make that with our shareholders in mind. Absolutely, that's the perspective in which we look at this. So all the decisions we make are saying what's best for the shareholders, because that's us.